Okay, so get ready for this. All right. We're going to do a deep dive into something really remarkable in the stock market. We're talking about something that's happened only a handful of times. It's the S&P 500 gaining over 20%. But get this, for the second year in a row.
Yeah.
Back-to-back gains like we haven't seen since, like, the late 90s.
Yeah, it's really more than just, looking at the raw numbers, though.
Hmm.
What's so fascinating about this is the context, right?
Right.
Because, think about it. 2022, that was a rough year.
Yes, it was.
The S&P 500 actually fell by 20%. So to see this kind of incredible growth spurt now, 2 years in a row, it really shows you how resilient the market can be. It's pretty amazing when you think about it.
It's like it just, like, took a deep breath and then, boom, took off like a rocket.
Yeah.
What was it? What were the big things that pushed it up like that? Was it just one thing, or was it a bunch of stuff all working together?
Yeah, it was kind of like a recipe with a few really key ingredients, right? So first of all, cooling inflation was huge. Like investors always get a lot more comfortable when inflation starts to, cool off. But we also saw some really strong consumer spending. And that's a big deal because it tells us that people are feeling pretty confident about the economy. And then there's the job market, which, yeah, there were some signs of it slowing down a bit, but overall it remained pretty solid.
Okay, yeah.
And you know what? Sometimes a little slowdown can actually be a good thing. It kind of prevents the economy from, overheating.
Interesting.
Yeah.
So that's a recipe so far. I mean, we can't talk about this kind of market growth without talking about tech. Those companies just, like,
Yeah.
crushed it this
Yeah.
year, right?
Oh, absolutely. Yeah, no question about it. They had just a phenomenal year. The Magnificent Seven, as they're called, were responsible for over half of the S&P 500's gains. That's Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. All of them just powerhouse companies. Nvidia in particular was like, whoa. Its stock price just exploded by over 180%. It's
Well,
incredible.
it really shows you the
I,
power of tech,
yeah.
especially when you're talking about things like artificial intelligence.
Yeah.
Those are really the driving forces behind a lot of this market growth.
It's kind of crazy how much power those seven companies have over the whole market. But hold on, wasn't December kind of rough?
Yeah, it was a bit of a bumpy ride.
Yeah.
December was a little bit of a reminder that, even when you've got a really strong bull market going, you're still going to have some volatility. It was actually the worst month since April, both of the S&P 500 and the NASDAQ.
And a lot of that had to do with tech stocks. They kind of took a little bit of a dip, and that, tends to drag the indices down with them. So yeah, it wasn't all smooth sailing.
So the question is, can it keep going? Is this incredible run sustainable?
That's the million-dollar question, isn't it?
Yeah.
A lot of analysts out there, they really think this bull market has a lot more room to run.
Okay.
And they're looking at 2025 with a lot of optimism.
That's interesting.
They're talking about continued economic growth, maybe even more interest rate cuts from the Federal Reserve, which would make it even cheaper for companies to borrow money and really stimulate the economy.
So cheaper to borrow, more spending, it sounds like. They think the good times are going to keep rolling.
That's the general feeling, yeah.
But I'm getting the sense there's got to be a but here, right? I mean, there's always a catch.
Well, there are some experts who are a little more cautious, yeah. They're waving a few caution flags and saying, hold on, folks. Some of these stocks might be a little overvalued at this point. When the price of a stock gets too high compared to, like, its earnings or its actual value, things can get a little shaky.
Right. Right. Makes sense.
Yeah.
And then there's, like, the whole world out there.
Oh, yeah.
All that crazy geopolitical stuff. That can always come out of nowhere and just throw a wrench in the works.
Oh, absolutely. That's like the wild card, right? You've got global events, political tensions. I mean, even something like crazy weather patterns can have an impact on markets. It's a complex system.
No kidding. So we've got this whole, like, scenario where the market has just been on this tear for 2 years, fueled by a bunch of different things. It's like this mix of the economy doing well, the tech industry just, exploding, and people just feeling really optimistic.
Right.
But now, we're starting to see some cracks in that optimism. Some people are saying, hey, wait a minute, let's not get ahead of ourselves. It's getting interesting.
Yeah, no, you put it well. It's definitely a fascinating situation. We've got this push and pull between optimism and caution, and it's all playing out on this global stage.
It really makes you wonder what's next. What's going to happen in 2025?
That's what we're all trying to figure out. And you know what? It's not just about the S&P 500 either. We've got to look at the bigger picture. Like, take the NASDAQ index.
Yeah.
It's heavily weighted towards tech stocks, and it saw a massive gain this year, like 31%.
Whoa.
That tells you a lot about where investors were putting their money. They were betting big on technology, especially things like artificial intelligence.
Makes sense. Tech is changing so fast, it's hard to keep up.
Exactly. And then there's the Dow Jones Industrial Average, the Dow. It didn't see quite the same gains as the S&P or the NASDAQ.
How come?
Well, the Dow is a little different. It reflects a wider range of companies, not just those high-growth tech giants. So it gives you a slightly different perspective on the market. It still ended the year up, by the way, over 12%.
Okay, that's not bad at all.
No, it's respectable. But the big surprise this year, you ready for this?
Yeah, lay it on me.
It wasn't some fancy tech stock. It wasn't even one of those meme stocks making a comeback. It was Doc Cocoa.
Cocoa. Like hot chocolate cocoa.
The one and only. Futures prices for cocoa shot up almost 200%. I mean, nobody saw that coming.
I definitely didn't see that coming. I would bet on like another tech company or maybe something in the energy sector with all the, changes happening there. Cocoa, that's a curveball. What happened?
Well, it all comes down to the weather, really. You see, climate change is starting to have a big impact on cocoa production.
Oh, wow.
Yeah, harvests in a bunch of key cocoa-producing countries were hit hard, and that really squeezed supply, which drove those prices through the roof. It's crazy how something like the weather can have such a huge ripple effect on markets that, on the surface, seem totally unrelated.
It really makes you realize how everything in the global economy is connected in ways you wouldn't even think about. But, okay, back to those amazing stock market gains. What does it all mean for regular people? People like me who are just trying to manage their own little investments.
Yeah, that's the key question, right? I mean, these numbers sound great,
Yep.
but how do they actually play out in real life for people who aren't, Wall Street whizzes? How can we make sense of all this and figure out what it means for our own financial future?
Yeah, that's a really important question. And it's definitely something we want to dig into a bit deeper as we keep going with this deep dive. So, we've seen these incredible gains. We've talked about all the excitement. But now we've got to look at what could happen next. What are the potential risks and rewards out there?
Yeah, for sure. And we even touched on some of those potential risks, like you were saying before we went to the break, things like interest rates and valuations. Those kind of jumped out at me.
Right, right. So let's maybe start there. Let's talk about those a little more.
Yeah, sounds good. So interest rates, right. That's kind of the elephant in the room.
Yeah.
Like back in September, the Federal Reserve, they started cutting rates. And that definitely gave the market a boost. But now they're hinting that maybe there won't be as many cuts in 2025. And that could definitely slow things down.
Oh, interesting. So maybe that whole easy money thing, is that maybe coming to an end?
Well, it's possible. You got to remember, when interest rates go up, it gets more expensive for companies to borrow money,
Right.
and that can have a real impact on their profits. And that, in turn, can slow down the whole economy. And when that happens, investors might not be so eager to buy stocks, especially if they think those stocks are already, overpriced.
Makes sense.
Yeah.
So what else should people be watching out for? I mean, besides interest rates, what are some other things investors should have on their radar?
Well, like you said, valuations, that's a big one. Some experts are worried that some of these stocks are just, too expensive right now. Like their prices have gone way up, but their actual earnings, the fundamentals of the company, haven't really kept pace.
Okay.
So there's this risk of a correction, where those prices kind of come back down to earth a little bit.
A correction. That sounds kind of scary. What would that look like exactly?
Yeah, I know it can sound a little unnerving, but honestly, corrections are a totally normal part of the market cycle. It's kind of like hitting the reset button. It brings things back into balance. And it's important to remember, even in a bull market like we've been seeing, there are always going to be ups and downs. That's just how it works.
Okay, so how do you see it coming? I mean, are there any warning signs or is it just kind of random?
I wish I had a crystal ball, but unfortunately, no. But there are definitely things you can watch for, like if interest rates suddenly spike up, or if companies start reporting disappointing earnings, stuff like that. Or even, some big geopolitical event. Anything that really shakes investor confidence can trigger a sell-off.
Makes sense. So we've got interest rates, we've got valuations, and then, of course, there's all that geopolitical stuff we were talking about. What are some of the specific concerns there?
Yeah, so you got to remember, the world is constantly changing. There's always something going on, right? I mean, you've got conflicts happening in different parts of the world, trade tensions between countries, political uncertainty, you name it.
Right.
And any of those things could escalate and really mess with global markets. It's hard to predict exactly how it would all play out, but it's definitely something to be aware of.
It's a lot to keep track of. It's like no matter how good things seem, there's always something lurking that could throw everything off.
It's true, but it's important not to get too caught up in the fear, right? Like, risk is just part of investing. The key is to understand the risks, manage your portfolio accordingly, and try to think long term. Don't let the short term stuff freak you out too much.
Right. It's not about avoiding risk altogether. It's about being smart about it. So, with all that said, is there any reason to be optimistic? Are there any bright spots in all this uncertainty?
Oh, absolutely. I mean, even with all the risks, there's still plenty to be excited about. For one thing, the U.S. economy is still in pretty good shape.
Yeah, that's true.
We've got steady growth, low unemployment, people are still spending money.
Yeah.
All of that creates a pretty positive environment for the market.
And, I mean, we can't forget about all that crazy innovation happening in tech, right? All that stuff with AI and, all those other things changing the world so fast.
Exactly. That's the other big thing. The tech sector is still a major force. I mean, you think about things like artificial intelligence, cloud computing, all that cutting edge stuff. It's still driving so much growth and creating all these new opportunities. I think tech is going to continue to be a major player for years to come.
So it sounds like we're in this kind of tug of war between risk and opportunity.
Yeah.
On the one hand, you've got these worries about interest rates, valuations, and all the, crazy global stuff that could happen.
Yeah.
But on the other hand, you've got this resilient economy and this tech sector that just keeps pushing the boundaries.
Exactly. It's a balancing act, and it just highlights how important it is to be diversified, to have a long-term perspective, and to stay informed. You want to be ready for the good times, but you also want to be prepared if things take a turn.
It's like you're sailing a ship, and you've got to be ready for both calm seas and, maybe some rough weather ahead.
That's a great way to put it. So the big question is, where do we go from here? What's the next chapter in this whole stock market story?
Well, if I knew that for sure, I'd probably be on a beach somewhere sipping cocktails, right? But unfortunately, nobody has a crystal ball.
Yeah.
What we can do is try to learn from the past, look at what's happening now, and, use all the information we have to make some educated guesses about what might happen next.
All right, we're back. And we've spent a good chunk of time talking about what happened in the stock market in 2024. The good, the bad, and the cocoa. But now it's time to look ahead. What might be in store for investors in 2025?
Yeah, trying to predict what the market's going to do is a tough game. It's like, reading tea leaves or something.
Right.
There's just so many things that can happen that you can't even anticipate. But, I mean, there are people who do this for a living, professional market analysts. They've got these fancy models and all kinds of data they analyze. So let's see what they're saying. Okay, so what's the verdict? Are they predicting more good times, or are they battening down the hatches for a possible storm?
Well, it's a bit of a mixed bag, actually. Some analysts are still feeling pretty bullish. They're looking at the U.S. economy. It's still pretty strong, and there's a chance the Fed might cut interest rates even more. And if that happens, it could really give the economy another boost, maybe even push the market higher.
So they're thinking the party might keep going, huh?
Basically, yeah. But then you've got other analysts who are a little more cautious. They're looking at things like how expensive some of these stocks are right now. They're saying, hold on a second. Some of these prices might be getting a little out of hand.
Yeah, I can see that.
Yeah, and then there's always the risk of inflation coming back. If that happens, the Fed might have to raise interest rates to try to get it under control, and that could put a real damper on things. And then, of course, there's the whole geopolitical wild card.
Right, all that unpredictable stuff that can just come out of nowhere.
Exactly. So it's really a balancing act for investors right now, weighing the potential for more gains against the possibility that things could go south.
It's like you're trying to steer a ship, and you're not sure if you're going to hit smooth sailing or run into a hurricane.
That's a good way to put it. So that's why it's so important to have a plan, Make sure you're not putting all your eggs in one basket. Think long term and, stay informed about what's happening in the world. That's the best way to navigate all this uncertainty.
So if you had to boil all of this down to some key takeaways for the average investor, what would they be? What should people really be focusing on as we head into 2025?
Well, one thing I always tell people is don't try to time the market.
Right.
It's almost impossible to predict exactly when it's going to go up or down, even for the experts. Focus on building a portfolio that's diversified, something you're comfortable with in terms of risk, and something that aligns with your long-term goals.
Okay, good advice.
And don't freak out if the market takes a dip. Those corrections happen. They're normal. If you've got a good, solid portfolio, you'll be able to ride it out.
That makes sense.
And lastly, stay informed. Keep up with what's happening in the economy, what's going on in the world, all of that. Things can change quickly, so be ready to adapt.
So as we wrap up this deep dive into the wild world of the stock market in 2024, I got to say, I'm feeling a little bit of everything, excitement, caution, you name it. It was an incredible year, but there are definitely some challenges ahead. But I think the most important thing is to just keep learning and keep asking questions. The more we understand about what's driving the market, the better decisions we can make.
Absolutely. And hey, even with all the uncertainty, there's always opportunity out there. So let's head into 2025 with our eyes wide open, ready for whatever comes our way.
Well said. Thanks for joining us on this deep dive. Remember, stay curious, stay informed, and most importantly, stay invested in your future.
And keep diving deep.